We need great steel makers, great aluminum makers for defense.
US President Donald Trump has long promised trade tariffs and is now moving to impose them. A 25% global tariff or tax on imports of steel and 10% on aluminum. Allies and neighbours of the US will be hit the hardest, with Canada, the Republic of Korea and Mexico among the biggest exporters of steel and aluminum to this country. China isn't among the top 10, it's 11th. But Chinese products like aluminum foil imports have already been targeted, and the Trump White House is indicating more moves against Beijing on investment, intellectual property and technology transfers. The US is also moving to block more foreign investment in the US. Washington is expressing concerns over Chinese ownership in areas ranging from semiconductors and communications to financial services. At this week's National People's Congress in Beijing, Premier Li Keqiang said Beijing was committed to open trade, but would also defend itself.
China will unswervingly promote the globalization of the free economy and protect free trade. We are ready to work with all relevant parties to advance multilateral trade negotiations and will work to soon conclude negotiations on the Regional Comprehensive Economic Partnership and speed up efforts to build the free trade area of the Asia-Pacific and the East Asian Economic Community. China calls for trade disputes to be settled through fair discussions, opposes trade protectionism, and will resolutely safeguard its lawful rights.
China could respond by curtailing agricultural imports from the US. Beijing imports about $14 billion worth of soybeans from the US every year. The Chinese could choose to buy them somewhere else, possibly from Brazil. Separately, China has already launched an anti-dumping and anti-subsidy investigation into US sorghum exports to China. Meanwhile, Beijing is continuing to correct problems in its overcapacity of steel and other products. Li Keqiang also said this week that China will cut a further 30 million metric tons of steel production in 2018. That's on top of the 170 million already cut in the last 5 years, at a cost of over 1 million jobs. And after US President Trump's State Visit Plus last November, China committed itself to further opening up its financial and insurance industries, a message that was surely delivered last week when China's top economic advisor, Liu He, was in Washington for talks. But the problem for China and other big trading partners with the US is that the Trump administration may not be satisfied with just imposing tariffs. The Trump administration says it's unhappy with the international trading system itself, this week taking aim against the World Trade Organization, an organization built on US free trade principles.
What I think the president wants to do in terms of the World Trade Organization is send a very strong signal to them across the board on this issue of trade that we're not going to take it anymore.
Imposing tariffs and taking on the global trading system could backfire on the US president. Many of his political allies are against starting a trade war. And then there are the economics of the whole thing, which just don't add up. Most economists believe that the tariffs will hurt American jobs, could dent US competitiveness and foreign investment. That could take years to show up in the US economy. And by that time, it could be too late. Nathan King, CGTN, Washington.